Hi everyone, we are continuing our past paper discussion for the subject Business and Accounting Studies. Today we will be going through the December 2018 past paper and we will focus on question number 31 to 40. Question number 31, total cost of production of a business which produced flower pots for the month of October 2018 was rupees 150,000, while the number of flower pots produced during the month was 500. So 150,000 divided by 500 will give you the per plot cost, that will be around 300 rupees per pot. If 20% profit margin is kept on production of a flower pot, the selling price of a flower pot is, now 300 is the production cost, 20% of 300 is kept as the margin, which means 60 rupees is the margin. So the selling price will be 300 plus the 60, giving you a selling price of 360 rupees. So answer is 3. Some expenditure items of production businesses and some elements of production cost are given in column X and Y respectively. What is the answer when the above expenditure items in column X are matched with the elements of production cost in column Y in the correct order? Now, electricity expense of a roof tile production business is a necessary cost in production. So, it's definitely a production cost. But is it direct or indirect? Can you quantify the amount of electricity consumed per roof tile? No, it's unable. Then it doesn't fall into the direct category, it will fall into the indirect category. So under indirect category, is this material related? Is this labor related? No. Then it would directly fall into indirect other cost. So the first one is indirect other cost. Wages of dressmakers of a garment factory. Now this is a labor related cost. Now you have to decide whether it's direct or indirect. Can you gauge the wage you have to pay for per unit production? Of course, yes. You can directly quantify their output to their labor. So, this will fall into direct labor cost category. So, here it will be C. Wage of a watcher of a footwear production business. Now, here can you relate the watcher's wage to per footwear output? No, it's unable. Why? He doesn't directly get involved. Yes, it's a labor cost, but here it will be indirect labor cost. So answer here is A. Finally, royalty of a book publisher. Here, for each book you publish, you will have to pay royalty. So, per book issued, you can measure the royalty expense. So, it's a direct cost. But is it material related? No. Is it labor related? No. Then it will fall into direct other cost category. So, here it will be B. So, for question number 32, the correct answer is answer 3, going in the order of D, C, A and B. Question 33. Kumudu invested rupees 100,000 earned from her business on 1st April 2017 in a fixed deposit at 12% annual interest. If the annual interest is to be received on 31st March 2018, then according to the financial statement of this business, prepared for the year ended 31st December. Now the financial year end is 31st December. So 3 months interest you cannot take. 3 months interest will be a receivable for you. Only 9 months you could consider for this financial year. So keep that in mind. They are asking you whether its interest income in the income statement is 12,000. No, that cannot be. Why? You cannot recognize the entire interest income because it has to be a portion for the financial year. Only for the 9 months cost you can take. 100,000 at 12% will get you for the year interest income as 12,000. So per month it will be 1,000. For 9 months it will be only 9,000. For the balance 3 months, which will be in the next financial year, it will be 3,000. So keep that in mind. So first answer is not the correct answer. Interest income receivable in financial position statement is 12,000. No, that cannot be. Why? You cannot recognize the entire 12 as receivable. You can recognize in your income statement the 9,000. So if you are recognizing the 9,000 in your income statement, you cannot recognize the entire 12 as your interest receivable. So here also it is incorrect. Interest income receivable in financial position statement is 9,000. No, 9,000 is the interest income that is appropriate for this year. So, third one is also incorrect. Final, interest income receivable in financial position statement is 3,000. Yes, that is the correct answer. So, correct answer here is answer 4. Question 34. A business has purchased a machine of rupees 500,000 on 1st January 2016. The effective life of the machine is 5 years. So you have the cost as 500,000 and of course you have the useful life of 5 years. Let's read further. At the end of the lifetime, scrap value is 50,000. So you have to deduct this scrap value at the end of life. What are you assuming in this 50,000? That after using for 5 years, if you want to dispose, you can dispose for 50,000. The amount of the depreciation of the machine shown in the income statement. Now pay very much attention to these keywords. Okay, they are asking you the amount of depreciation in the income statement prepared for the year ended 31st December 2018. Now a lot of students made an error in this MCQ because the moment they saw amount of depreciation, they quickly jumped into the accumulated depreciation amount. But they are clearly asking you amount of depreciation in the income statement for 2017 financial year. So first you need to know the depreciation value for 1 year. So 500,000 minus 50,000 divided by 5 will give you the per year depreciation of 90,000. So every year in these 5 years you will depreciate it by 90,000. Okay. So here the correct answer is answer 1. 90,000. Use the following information to answer the questions number 35 to 40. Following are a few balances extracted from the trial balance of Janaka's business as at 31st December 2017. Now when you get a question like that, don't first jump into the MCQ. First read each line item so you are aware about what are the cost items and what are the income items available. Okay. You have a opening capital, stock which is opening stock, sales, purchases, you can see carriage inwards, okay, debtors, insurance expense, administrative salaries, financial expenses, discount received, other income, discount allowed, okay. Additional information, annual insurance fee for the year 2017 is 20,000. But here you can see they have only included 18. So looks like there is a payable of 2,000. Keep that in your mind. Rupees 3,000 of debtors should be written off as bad debts. So here it's directly saying 35,000 as debtors. But from 35 you need to deduct 3,000 as bad debts. And that 3,000 should come to your income statement. Remember that as well. Cost of stock as at 31st December 2017 is rupees 30,000. Now question 35. They are asking you to calculate cost of sales for the year ended 31st December 2017. Now how do you find the cost of sales? First you have the opening stock. Here you have the opening stock of 40,000. I am not putting the 3 zeros here. So you have the 40,000 as opening stock. Then you have purchases. How much do you have as purchases? 150,000. We also saw carriage inwards. So you need to add carriage inwards as well, which is 3,000. So what is the total? That will be cost of goods to be sold, which is 193,000. So from this cost of goods sold, you need to find the cost of sales. So you would deduct the closing stock. They have given the closing stock as 30,000. So from 193,000, you would minus 30,000. You will have cost of sale of 163,000. So answer is answer 4. Question 36. The gross profit of the business for the year ended 31st December 2017. Now you have the cost of sale 163. Let's see sales. You have sales of 250,000. Now just don't directly jump into finding cost of sales. Finding the gross profit. See whether there is any sales returns or return inwards. We read the question in detail. We didn't find anything like that. So you could directly move on in calculation. So 250 minus 163. So this will get you 87,000 as your gross profit. Answer 1. The amount of insurance paid in cash of this business for the year ended 31st December 2017 is. Now you should pay 20,000. This is the entire annual insurance fee. But you have only recognized 18,000. So you have to pay 2,000 balance as well. So looks like you only recognized what you paid. So the amount paid in cash will be 18,000. Answer 2. The amount of debtors in financial position statement of this business as at 31st December 2017 is. Now you have the debtor balance as 35,000. From this 35,000, you know, as per additional information, you need to deduct 3,000 as bad debts, leaving you with debtor balance of 32,000. So that will be answer 2. Question 39. The net profit of this business for the year ended 31st December 2017 is. Now you need to find the net profit. You know the gross profit as 87,000. So let's mark it here. GP, gross profit is 87. Now you need to deduct all your expenses. You have to deduct certain expenses and then you have to add certain income to arrive at your net profit. Okay. So let's go through each one in detail. We took the opening stock, sale, purchase, carried inward done, debtors done, insurance expense. So here insurance expense, will you take 18,000 or 20,000? You should recognize the entire 20 because that's the annual fee. So you need to deduct 20,000. Administrative salary is 26,000. No further information. So we'll take it as it is. Administration salaries. Financial expenses 4,000. So again here they don't say anything else on that. So we take that as the final expense. Discount received 2,000. Now that's an income which you need to add. So discount received is 2,000, that need to be added. Other income of 5,000 also is an income to the business which needs to be added. Finally, you have discount allowed which is also an expense. So you need to deduct that 10,000. Are we complete? No. Remember, there was bad debts. That's why when you're reading, if you can just mark those at the edge. You need to recognize the bad debt of 3000 as an expense as well. Okay. So let's see 87. Let's see the total cost that we need to deduct from 87. So you have to deduct 63 as expense from 87. That will give you 24. To 24 you need to add 7000 which is income, giving you net profit of 31,000. Let's see. Yes, that is answer 1. Final question, question number 40. Total equity of the owner of this business as at 31st December 2017 is. Now you can see they have given you the opening capital 300,000. Now you need to find the closing capital. So opening capital plus the net profit minus any drawings minus any losses that you had to bear, you will get the closing capital. Here no any drawings, no any losses, so only capital and profit. Opening capital of 300,000 plus 31,000 of a profit, you will end up with total closing equity of 331,000, which is answer 1. I hope this video was helpful to you. Thank you for listening and subscribe and support us for more videos.